Hi, welcome to the Global Markets Advisor again today. Today we're looking at the acronym of CIVETS. That's spelled C-I-V-E-T-S. The question is what does it mean? Well, CIVETS is actually the new emerging market acronym standing for Colombia, Indonesia, Vietnam, Egypt, Turkey, and South Africa. According to Michael Gogan, the group chief executive at HSBC Holdings, he has said, quote unquote, "We will see a new set of dynamic economies. The CIVETS are joining the BRICS," again referring to Brazil, Russia, India, and China. Any company with global ambition needs to act now in regards to these markets. For in today's world, you can't afford to wait for business. You have to go to where the business is, end quote. So I just wanted to briefly mention a little bit about CIVETS, and also to let you know that there was a distinct PDF on each of these countries, as well as many other countries, on the globalmarketsadvisor.com. So you can go along and browse these and download these if you'd like more detail. But for Colombia, on 16th of March 2011, Colombia was awarded the investment grade status by rating agency Standard & Poor's. The agency cited the economy's growing resilience to external shocks and its favorable growth prospects in support of the upgrade. During 2011, the economy is expected to grow to 4.5 to 5%, and FDI investment is forecast to reach USD 8.8 billion. So the country is offering a wealth of opportunities for all sorts of companies. Strengths of this market: the booming economy. The Colombian economy grew 4.4% in the first quarter of 2010 and was estimated at plus 5% by the end of 2010. Investment is 5 times greater than in 2003. New free trade agreements were signed and should be ratified within this year. U.S. companies are currently looking to the region as an area for exciting growth. According to the World Bank's Doing Business report, Colombia has the best business environment amongst the main economies of Latin America. And what is more, it has been ranked as one of the top 10 reformers in 4 of the last 7 years. Pretty large stats for Colombia. Now, looking at Indonesia. Indonesia's primary market strength is that it's a strong and a growing domestic demand for goods and services by their 240 million in population, with an ever-expanding middle class. The market strengths include their vast infrastructure, developmental opportunities, a gateway to other Asian markets. They're very hospitable and friendly in attitude towards Western business, and they are in the next wave of emerging market growth. Western companies who are very positive, who are doing business there, about their future growth and their development within this country over the next 5 to 10 years. We next turn our attention to Vietnam. Vietnam, it looks like an elongated S. It stretches the length of the Indo-Chinese peninsula. The war caused its economic development to suffer, but it's catching up at a very rigorous pace. Vietnam is a high-growth market, growing at 5.32% in 2009, and is one of the top expanding economies in the region despite the global financial crisis. It saw a double achievement of economic growth and they are reining in on inflation. The strengths of the market include they're politically stable and safe. Their growing young population of 87 million is growing their domestic market. The middle class emergence. They had WTO accession in 2007, and their annual GDP growth is between 5 to 6%. The opportunities that I would say is that the WTO is the precursor for attracting far more investment. It always has been. As the economy expands, infrastructure in power, telecoms, and transport are needed. The retail sector alone grew by 20% last year, and it's expected to continue. We next come to Egypt. Egypt is the largest Arab market with over 75 million people. Privatization since 1995 and economic reform since 2002 have increased the economy, and FDI has risen steadily. Egypt is increasingly booming and becoming an export hub for the U.S. and the EU markets because of its large pool of skilled labor and low utility rates, as well as trade agreements between the U.S. and the EU. Egypt offers a wealth of opportunities for American companies wanting to capitalize on the strong growth and the FDI investment, especially in areas of construction and garment manufacturing. We next come to Turkey. Turkey's sizable youth population guarantees the country sufficient productivity and earning power and a consumer-laden future. Turkey acts as a natural bridge between both east and west and north and south axis, and is an efficient trading platform for all Europe, Eurasia, the Middle East, and North Africa, with aspirations to develop itself into a regional trading and financial hub. Turkey provides easy access to a 1.5 billion strong regional clientele, including the sizable Iraq and Iran. Turkish companies are extending their reach to Asia and are becoming a natural hub to many significant countries. This country of 75 million has availability of capital at $730 billion US and are a rising star in the emerging markets of today. And last week we come to South Africa. The BRICS 2011 Leaders Summit included South Africa at the BRIC table this year, a shocking addition and one that should be well noted. South Africa is one of the more wealthy nations in Africa, and it's currently the largest in US dollar terms at around $350 billion. This is quite small compared to the BRIC standards. However, the inclusion of South Africa had more to do with geopolitical than economic reasons. Foreign companies seeking to take advantage of the emerging opportunities are advised to first consult a professional service provider to better understand their specific field and determine how best to enter or grow. So really, that's the question. Have you thought about entering into new markets? Have you developed a strategy, a BRIC strategy, or in this case, a CIVETS strategy? Or perhaps you've already dipped your toe in the water. Well, I want to encourage you to investigate your opportunity in the emerging world today for business, to increase your profit share and to maximize on the profitability that you can have. One way of doing that is not only by listening to these video updates at the Global Markets Advisor, downloading our free PDFs that you can find littered throughout the old blogs and on the sidebars, but another way is to join one of our master classes. We have master opportunity classes in which we spend a half day or a full day analyzing different markets and the opportunities that exist in the global arena. Within these classes, we'd help you to be able to answer the following questions. How do you get started? What should you research? Which market is the best fit for you? What will you need? And what are your options? What skills and knowledge will you need to develop to be successful? And many more topics. So if you find your interest, register that on our site, globalmarketsadvisor.com. And thanks for tuning in today, and we look forward to seeing you in the very near future.